Hi, I'm Roy Collin, and welcome to the show. I've got six podcasts, as you'll see behind me. A speaking podcast where I'm talking to speakers, coaches, authors, and even marketers. I've got the meditation podcast where I'm talking about meditation, breath work, yoga, chakras. I've got a load of meditations from 1 minute to 2 hours. I've got the Learn Polish podcast, and the episodes are about 5 to 10 minutes, and we deal with everyday topics like going to the dentist and things like that. The Awakening podcast is where I'm exposing fraud and corruption, but with solutions. And I've had guests like Mickey Willis, Dr. Peter McCullough, David Icke, and Thomas Rentz. The Crypto Podcast is where I'm exposing fraud and corruption in the crypto blockchain technology. So about cryptos and NFTs, but also on the good things and how to invest safely. And finally, the Podfather, which you see there on my t-shirt, thepodfather.me, is where I'm helping podcasters either to start a podcast or existing podcasters how to grow their audience. And most of the episodes are short, but they're good tips that will help you improve your show. I also have a store on all of my podcasts, so you can go in. There's some of my products and also some of the affiliates that I do, and that helps me with the show. You'll find everything on bio.link/podcaster. And I'm also helping people start a podcast as well as doing a podcast tour. So you'll find everything on the link there. I'd like to thank my sponsor, danielpacker.com. He's helping people with fear, doubt, and anxiety. He's got a 90% success rate, and you only pay if he helps you. So be sure to check him out, danielpackard.com. I hope you enjoyed this week's episode. Be sure to comment on the social media and let us know what you think. You don't always have to agree, but as long as it's not abusive, the comment will stay up. Welcome to the Crypto Podcast. You can find all our episodes on thecryptopodcast.org. My guest today, he's an author, entrepreneur, corporate strategist. He's a global thought leader in the future of finance and its impact on business and society, a member of the Forbes Business Council, and he was listed as a top 10 influencer in Fintech Power50 list for 21 and 22. He founded the research publication and consulting house TAB Global, TAB, in 96 through its platforms such as the Asian Banker, Wealth and Society, the Banking Academy, and TAB Insights. He has had extensive contact with leaders in banking and finance around the world. And you might be saying, why is this important? And basically, his book, The Great Transition, The Personalization of Finance, is here. He outlines how the banking industry will evolve from being focused on platform technologies to a level of personalization never seen before. He describes the roles of cryptocurrencies, blockchain, gaming, and other technologies in this transition. And the book was written to help disruptor technologies in finance chart their course, which I'm looking forward to seeing. So please welcome Emmanuel Daniel.
Great to be on your show, Roy. And thank you for that introduction. I mean, that's a lot of things in there, but let's peel the onion and and build a perspective on how people should look at the future of finance and the impact on their own personal decisions.
Definitely. And to be honest, I don't always read out, but I think for the credentials, it's important today. But what I want to do, I want to know a little bit about you first. I saw some of the YouTube videos. I'm not sure when it was. It was like 110 countries. I think I've been to 40, but that's impressive. And Uzbekistan. I mean, I looked at a video of you doing that. Place looks beautiful. I mean, the way people have a kind of bucket list of where they want to go. You have now put that on my bucket list. It's like the architecture is incredible. So I'd love to hear your kind of journey on your 110 countries.
Well, I've now done 123. I had done 90 just before COVID, or 90, maybe 93, 94 before COVID. And after COVID, I said to myself, you know what? I travel around the world. I go to New York, every year, at least 2 or 3 times a year. And yet I take a plane directly from New York or to Beijing or to Singapore, where I'm from, and I see nothing else in between. Or from London to Singapore, or that sort of thing. And then I said, you know what, I'm going to look at all the countries that I haven't been. And on one trip from London back to Singapore, I said, oh, Albania, I haven't been there. And then I started building a an interest in the Balkan region, and then you you take every opportunity to go on there and examine. And I had studied about the Balkan region in school, but it's nothing like being there. And the thing about Uzbekistan that you mentioned, Samarkand was the capital of a very important Islamic civilization in the 1500s or so. And it's so interesting that India looks different from Samarkand looking south than if you were in India looking out. And the reason is a lot of the northern parts of India were actually ruled by Muslim rulers. And this was the same tribes that originated the Ottoman Empire, moving eastwards and establishing, a stronghold in Samarkand, in Uzbekistan, and from then on down into South Asia. So the world looks different depending on where you're looking at it from. The UK will look different if I was looking at it from Scandinavia, the Vikings and so on, and look very different if you're looking at it from Spain. So in that way, I've now done 123 countries, and the next book that I'm working on has a lot to do with civilization. And I'm building on the same theme as my first book, which is about the future of finance, and that is humanity as a whole is becoming increasingly personalized. The technology is taking us there. The technology is enabling the individual or empowering the individual with a lot more information that he had before, and with a lot more access and a lot more mobility than he had before. And that will have a profound effect on how different societies evolve. And then I go back into history and look at how the different civilizations handled information, and the increasing personalization of society itself. So, I'm on a journey, both a physical one as well as an intellectual one. And that's why I'm very happy to be on your podcast.
Very good. And just like when I looked at the architecture, I just have you come kind of across or studied the Tartarian Empire at all?
The what empire again?
Tartarian.
Tartarian. No, I have not studied it very much yet. Yeah.
Yeah. No, because it's just I'm seeing videos and stuff on that, and it's just showing the architecture, which is replicated around the world, that they're kind of like an energy source, but it's very hard to find information on it. Yeah.
That's interesting, because one of the sultans in Samarkand, had interest in astrology, energy, and all of that. So there's a little bit of that, but it's really an amalgamation of both Islamic and Mongolian architecture. Coming down south from the Mongolian plateau. So it's fascinating that way in terms of architecture, but also what happened inside those buildings. They had a very strong education system where these were universities in their time. So the centers of learning, both in astronomy, history, alchemy, and all of that. So it's fascinating that way.
Very good. So you mentioned education. So I think you might kind of touch on your own education and then how you got into creating, the tab.
Growing up, I wanted so much to be a lawyer, and long story short, when I finally qualified, that's exactly what I didn't want to be. And growing up in Singapore, Malaysia, where I come from, we were a British colony before, and I'm one generation past the phase where we got our independence, but our education system was essentially British. I do have a degree from the University of London, and our entire worldview was Anglo-Saxon, in that regard. And I was also brought up in a Christian home, so I'm as Western in the framework within which I think as anyone else in the Western Hemisphere. Although being Asian, and this was post-colonial. And then when I graduated as a lawyer, I'm a member of Lincoln's Inn, and in the UK. And I just didn't want to be a lawyer. And I spent 10 years of my life, of my adult life, after graduating, going into management consulting and so on. A lot of consulting-related jobs, actually. And then I decided that, you know what, I want to start something on my own. And the publication model lent itself very well. And I started something called the Asian Banker, which was a very pompous name because it immediately set the tone of the relationship I could have with CEOs and chairmen of banks in every Asian country. And why banking? I have had no previous history in banking, no understanding, no propository towards banking, but banking lent itself because the other thing I would have loved to do was to do government. But governments in Asia at that time were very thin-skinned. If you write about them and they didn't like it, they can put you in jail and sue the pants off you and stuff like that. So banking was safer. It paid the bills. I call banking the cathedral industry. You go into any country, you will see a banking system. It looks after people from cradle to grave. By understanding the banking system, you understand the country. And like that, with the name called Asian Banker, I think I brought together bankers from about 18 Asian countries together. I mean, today it's like 40 or 50, and we're not just Asian. We are in the Middle East. We do business in Africa, and we run programs in the US and UK and so on. So it was my personal journey. I liked cross-cultural experiences, and the banking industry gave me that platform to get to know a lot of different people, and through that, you create the forums and so on that you bring people together. And today, what's really nice is that because I started my business in East Asia, going westward, I also had a front seat view of all the innovations in finance that were originating from East Asia. So in the early 2000s, when China was on the rise, I watched how the big four banks with customers today, any one of them would have 700 million customers. That's twice the population of the US in one bank, and how they consolidated 1,000 data centers into 2 in one short year. These were the rush to develop and to modernize and to excel that were taking place in East Asia. And then you have you've now heard of Alipay and Kakao Pay and all of that. So I had a front seat view of developments that were coming out of Asia that the rest of the world was interested in. And then when I look at some of the developments from the West coming this way, I was able to put my finger on issues such as why didn't the platform players in the US add financial services to their platforms? So why is there no WhatsApp Pay as there is WeChat Pay, for example? And also, why didn't the platform players in the West excel in creating super apps, which are quite generic in East Asia? You go to any one country, you'll find that super apps are platforms that is originated from one player. It can be a ride-hailing app, it can be a food delivery app that becomes several things because they onboard other applications and micro apps onto their platforms and revolve around the lifestyle of the individual. And seeing the dichotomy between developments in the West versus East, and understanding why that was possible helped me to create depth. And today you find that the development on platforms has continued even further. You have some of the leading Chinese platform players going into areas like supply chain, logistics, and fashion, and creating platforms where how we consume is being fundamentally transformed. And that's the frontier of the platform economy, that is consumption and ephemeral fashion that actually changes almost every 6 weeks, and the supply chains are supposed to keep up with that development. So it's been a fascinating journey, and being able to switch between Western and Asian developments, gives me a very deep perspective on why it works in one jurisdiction and it doesn't in another, and the philosophies and the beliefs that underpins some of these technological developments.
What I've seen is there was a friend of mine, and she was doing a non-profit, I think it was for Iran, and she had saved money on one of these platforms where you get money just to give to the charity. And when they realized it was Iran, they blocked it out. I knew somebody else, it was like they were trying to give money to their mother. It was in one of these other countries that are banned. Like, even no matter what you're getting into any documentation of a lot of stuff, they have a list of a lot of countries. I mean, that is totally unfair on the individuals in them countries. Like, like what ways can people circumnavigate that? Because like, if you kind of leave the country and you want to help your mother, you should be able to send her money.
In fact, the UK Parliament and a friend of mine had prepared a paper for the UK Parliament on this financial access, and you have countries like Somalia, for example, where individuals don't have financial access, and therefore they can't even receive remittances from their family working abroad. So this is a pretty serious issue, and what's interesting there is that the regulators understand the issues, and the global regulators understand that there is an issue, that financial access is key to economic development, especially of the countries that are suppressed for whatever reason. The problem is twofold. One is the weaponization of the global financial system, and there, unfortunately, the perpetrator, the main perpetrator, is the United States. And the second is superimposing new technologies on existing, into existing wineskins, a new wine into existing wineskins. And by that I mean that the technology now exists for there to be highly responsible, transparent transaction mechanisms where I can send money to someone in an underdeveloped country using digital assets, tokenized money, and so on. And of course, cryptocurrencies. But the regulators keep putting on even more regulation to make even that impossible or difficult. And where the regulators embrace the new technologies that cryptocurrencies and digital assets are bringing on stream, they play only with the current incumbent wholesale payment, processing, trade finance players, and try to digitize their business models, which doesn't solve the problem. And there are several problems. One is, of course, access itself. The other is the cost of the access, and the third is the ability to pay each other freely, regardless of economies and so on. So you've identified a very important problem in that there are millions of people in subservient economies who would be able to live ordinary lives if only they had access to the financial system. Now, in my book, I outline the phases by which innovations in finance will take place. I reject the idea that a financial architecture can be built by the current global regulators, because they have their self-interest at heart. And you should listen to the Bank for International Settlement saying things like the cost of transaction is high, and there are many people in subservient economies who have no access to finance and so on, and we should solve this problem. And they make themselves the solution to the problem, when actually they are the problem. There are many players already in the marketplace who can get money to a low-end economy seamlessly and in a very cheap manner. That the technology already exists. It's the regulation and the weaponization of the financial system. And so the assertion I make is that the financial system will be transformed when there is a crisis. When there is a destitute problem that makes regulators unable to defend the existing infrastructure that they have. I think related to that is the question of the dominance of the US dollar as a global currency and the global reserve currency. Now, there are lots of discussions and defenders and and attackers on the idea of the dollar retaining its role. It will, in my view, despite the dire need for a more equitable payment and banking system, global banking system, the dollar still retains that role and will only lose that role if an alternative mechanism comes about, and that alternative mechanism will come about in times of crisis. In fact, if you look at what's happening right now, one of the situations that gave rise to the question of the dollar being a global currency is the Ukraine war. And the unintended consequence was that all of the other countries looking at how the US dealt with Ukraine and censured Russia and froze Russian assets in the global banking system, frightened some of these countries and made them think that the US will be able to do the same thing. Now, several countries now have tried to create alternative payment mechanisms, and many of them are just bilateral. Saudi Arabia to China, South Africa to China or to Saudi Arabia, and so on. They're all bilateral, and they are based on the amount of trade done by two banking systems, but none of them are substantial enough to be global. And yet on the sideline you see that Bitcoin lends itself to be global from the get-go, right? So then what the question is, at which point will something like Bitcoin become universal? And will the existing banking regulators, both the global banking regulators and the regulators in the major jurisdictions, the US, the UK, the Eurozone, and so on, be able to come up with their own digital version of their own currencies that will make them a competitor to the potential of a crypto dominance in global payments. So that's the state of play right now. So we can go in any direction.
There's so much to touch on it. Like with the country having their own digital currency, I know Estonia wanted to do that because I've got the e-residency. I've got a company in Estonia, and I've been there a few times for a month, and like it's the EU blocked that, so they were trying to do that, and the EU stopped it. So it's going to be, and it seems to be that it's just total control. They want to control everything. They don't want states to be sovereign because not everybody's going along with their agenda that's happening. Like, because they basically want to have full control, and that's why now all over the world there's like people saying use cash instead of credit cards and stuff like debit cards, because they don't want people. They realize that power of cash.
Yeah. And in fact, when you talk about central bank digital currencies, the biggest enemy of central bank digital currencies are the domestic banks of the countries in which these CBDCs are issued. Because banks make a ton of money every time a credit card is swiped. And here you've got central banks saying that actually we don't need you. We can transpose this money directly to the end user, but we're using you anyway. And it's and then the banking system says, no, you know what, we're not going to help you promote such an idea. And then what the regulators did, and this is the state of play right now with the Bank for International Settlements, is that they changed their tune, and they're saying that okay, you know what, retail CBDC is really not necessary. So we will just focus on the wholesale component and let the banks issue their own versions of tokenized deposits. It's a very interesting development, but whether a technology is successfully implemented, it will take the path of least resistance. It's not something you can dictate. It's not something that you can narrate how it should evolve. And the path of least resistance is that people will simply just do what makes sense. And you're right. For a lot of people, why don't we just go back to cash for now? But the problem comes in when you're trying to exchange money in a different currency, you're trying to do a cross-border payment and all of that. And there are technologies that exist side by side that are competing to become the dominant technology going forward.
With you mentioned the credit cards, like you've MasterCard and Visa, they have a monopoly, which is kind of scandalous that they're like taking 3% of everything. But if I look at all the kind of the way people are paying each other, especially Europe and the States and stuff like that, it's like some of the countries, they have like Revolut, and if I transfer money to you now, it's instant, there's no fee. And Wise might be a tiny transaction if you're doing a currency exchange or whatever, but it's instant. I mean, there's times I was doing property for years. There was times my money would disappear from one account, be gone for 2 weeks, and then it'd appear. And like they were charging like 5% for currency exchange, and even sometimes, like in Poland was one, they were doing like 10%. They were saying, oh, we have to change it to euro first and then to the dollar. And if you go to an airport, they're like charging 25%. And I kind of shake my head when I see people actually exchanging their money there. How do we actually beat that? Because it's for me, when I watch every penny, like even the PayPal, because I'm going to touch on a lot of them because they're all kind of related, I think. Like PayPal, they take sometimes up to 10%. Sometimes even when I'm paying somebody, I say, okay, I want to pay the fee for this because it's less when you do it that way rather than me just sending it. And they're charging on that side as well. Like they're taking 10%. So when there's a kind of a circle going around with people trading their services, they're just taking it.
Yeah. So, when you think about what a payment is nothing more than a transfer of information, okay, from one point to another. And if you can today transact a phone call between two people or a text message for free, there is no reason why you can't do a payment for free. And a lot of the innovations taking place in Africa today are based on telco networks, and the so-called startups, they build the interfaces on both sides of a transaction, and they make it cheaper. And what they found was that transactions that in the past were carried out by Visa or MasterCard, where two listed companies on the New York Stock Exchange make money, today the profit remains in the country. And some of these payment companies are profitable from the word go. And just by making it affordable and going back to the basics of what payments are supposed to be. Now, the interesting thing about Revolut, if you follow its history, when it first started, all that they were trying to do was to keep the cash on both sides of the transaction and pay the cross-border payment by contraing each other. That means there was no real transaction taking place. It was the assets on both sides of the transaction. So you get an IOU here, and your counterparty gets paid on the other side. But every time that Revolut went into a new jurisdiction, especially when it came to Asia, many of the regulators insisted that there should be a bank on either side of the transaction. And then Revolut will say it's the banks that make the fees, not us. We still pass on the benefit to you. So it's actually regulation that slows things down, that increases costs. This dichotomy, we should call the bluff on it. The regulators are the actual cause of the problem. So the thing that we are tending towards is the technology is taking the role of the intermediary away. Now, if you take the gold standard of payments today, it's Bitcoin. It's owned by no regulator. It's validated by the parties in the transaction, and it doesn't have an intermediary processing the transaction. And all we need to do is to have payment systems that tend towards that as the standard, and then take away all the unnecessary costs and be able to, complete a transaction instantly. It's just that on and on and on, the regulators put in new requirements and new points of friction to slow down that process. We are now coming to a point where digital assets can be transacted between parties, and what regulators want to do is to license the platforms that enable these transactions, and again that becomes a point of friction. So whenever regulators say, "Oh, we're trying to solve the problem of reducing costs and increasing speed," the system was created by them, and it's well within their means to solve that.
I've touched on this a few times with people, but I think with your experience, it'll be worth kind of going into it even further. Like the know your customer, because like in the crypto world, there's a lot of digital nomads, so they don't have the utility bill and everything. And it is so easy. I can buy any crypto now and put in a debit card or a credit card, whatever, and straight away. But when you want to reverse it, it's not that easy. And they're just taking full control. And I remember with Binance, I was looking at the financial report on that, and it was actually signed by the company, not an individual, which makes it invalid. So like this is one of the biggest organizations that most people are using, and their financial documentation isn't correct. And I mean, I spotted that, and I'm not like, this isn't my sector. I know I'm doing real estate and construction all my life. So like when things like that are happening, I mean, like at the end of the day, when we get away from fiat, it's okay, because if everyone is going to the hairdresser and using the crypto to do that, and then he's buying his meat and whatever, it's all good. But unfortunately, most of us have to change it back, and that's where they're catching people.
Yeah, so we are that's why the title of my book is The Great Transition. We are in a transition between fiat and digital, between Web 2 and Web 3. Because when we are fully in the Web 3 world, there are a whole lot of validation mechanisms like identity, for example. You and I can validate that we are who we say we are because other people validate us. And so the technologies for that exist. The irony is that even there, these technologies are being funded by venture capitalists. And whenever you see venture capitalists promoting transition in technology, you know that they're there to make money. And the platform, and the whole idea is they want to dominate the platform. They want to be the dominant platform, stuff like that. So, so we are in a transition. The gold standard, the ideal situation is where there are no intermediaries. But except for Bitcoin, everything outside of that in the digital asset world, in the crypto world, has intermediaries. So I'm fascinated, and coming back to my interest in civilization and humanity as a whole, I also study how intermediaries evolve and change. So if it is not this intermediary, if it's not the central banks, it'll be someone else. It might be the venture capitalists as the intermediaries. And technology will just keep creating new intermediaries. And then the question is, what is it that we want to achieve? We want to achieve costless, transparent, instant financial systems, that are secure. So and in just that, we want the regulators to secure it for us. So there are many questions that we won't be able to answer today. But as long as we have sight of what is possible, the big question is, how does society as a whole make that transition to where we want to go to? In countries like Zimbabwe, even in Nigeria, Nigeria started a CBDC of its own, but because ordinary people in Nigeria just don't trust the naira, the local currency, they just go into crypto. And so the motivation is that we don't trust your fiat currency at all. But in many other jurisdictions, people do trust, cold hard cash. So in those and then the banking system is dominant enough. Most people are banked, and therefore, even within Africa, if you move from Kenya, which is where the M-Pesa started, and M-Pesa started entirely outside the banking system. By the time you move to Nigeria, M-Pesa doesn't work very well. Then by the time you move to South Africa, which has a very established banking system, M-Pesa doesn't work at all. So basically, we all have legacy infrastructures that we are comfortable with. Then the question is, at what price will we move to the new innovations that are coming on stream?
I saw you interviewing. Well, you were kind of like having a nice chat. Pat, I don't want to say his surname because it's like Patrick something from Moby Cash. So like I'm not sure what date that was, but it was like 16 countries in Africa that heaved. I don't know what they're at now, but you might kind of touch on that because I don't know anything about it.
Yeah, so it's one of the telco based payment systems. It's a private company that provides interbank transfers, first in Rwanda, and then in 16 countries around in the East Africa region. Basically there are several versions of MobiCash competing with each other. And in that way, there are several versions of remittances in the UK, in Europe, and even remittance systems that are country specific, UK to Philippines, UK to Uzbekistan, UK to Kyrgyzstan, and so on. So there are any number of innovations, but they're all the same in that it's basically transporting information from point A to point B, and even if those 2 points are cross-border, meaning in different jurisdictions. And MobiCash basically uses a telco platform to transact, And in order to be a payment player, it has to provide its own liquidity and its own settlement mechanism. That's where a lot of the payment infrastructure are at the moment. That if you don't have your own liquidity, including Revolut, if you don't have your own liquidity, the technology means nothing. Because there's millions of dollars transacted from one country to another that you can't actually process and transfer all of that money instantly 24 hours a day. Some of it gets transacted on a netting basis, meaning that the money doesn't really move from here to there, but because you know what the netting situation is between two parties, you just cross out each other and have either side paid. So there's a lot happening on the payments front, and we just need to look around the world to see what options are available, but also what it takes to make a payment platform successful. So if you take PayPal, PayPal was an interim solution for small business transactions. And as the point-to-point payment and settlement of trade, cross-border trade between two countries becomes simpler, you will see that PayPal will not be able to keep up with the trend, and you will find different models coming on stream.
And with the MobiCash, what are they charging people? Are they is it like Revolut that it's free, or are they taking a percentage?
They also take a percentage, but it's minuscule. In fact, almost regulated in that the regulator in Rwanda and in Uganda will not allow MobiCash or any player like MobiCash to charge more than a few bips per transaction. And also, in order to run its business, MobiCash actually had to secure, if I remember correctly, the pension payments in Rwanda. And they needed that as a core business in order to have the volume to be able to pass on the savings to the end customer. And so all of these payment players have the same issues. They need critical mass, and so they need a dominant asset base, and that's usually something that's sponsored by government, whether it's the pension system, the school teachers' salaries, or government procurement and payment, something like this. And once they have got a core customer base, they can, then every transaction becomes cheaper, and they can pass on the saving to their consumers. So in that regard, actually, a lot of what's happening in payment is not just about technology. It's also about business models, and that's where MobiCash succeeds, where some of the others don't.
And if we kind of look at all that's happened over the years, because they're always kind of, with their regulations and money laundering and everything, but they've all been caught, because they're the ones that are actually doing it. HSBC, a load of them have been caught by being fraudulent, and like just how they treat their customers. It's like I see this the whole time all around the world and in America, how they just take control as if like this is our money and we do what we want with it. They do not respect the customer anymore. And it's like, I don't know anybody. I mean, like the Irish banks, like they're fraudulent as much as you get. Like I have evidence on that. And it's an international thing. And like people have no respect no more for banks.
Well, the thing about know your customer and anti-money laundering is there are two sides to the whole tale. One is the legitimate concern that regulators have and society should have on money laundering. Money procured through prostitution, through child labor, through all kinds of criminal activities, finding its way into the official system. But lo and behold, money laundering always existed. Entire financial centers exist without naming anyone particular. We know their names precisely because they help to discreetly help their customers to launder money. The U.S. Weaponization of the financial system includes money laundering, unfortunately. And so the U.S. Reserves the right to censure any bank, any country for having processed dollar payments through the U.S. banking system, going to New York and out again. And some of it is not really money. Well, it's arguable. Like, for example, Standard Chartered Bank many years ago was fined $300 million for Iran-related transactions. And that was done, a lot of it was done during the time when Iran was in the good books of the Euro, but in the good books of the EU, but in the bad books of the US. And so is it right or wrong, to help Iran process some of their oil money in dollars? So the thing is that there are two sides to the coin in terms of money laundering. As long as it is not weaponized, it is, is equitable and is justified, that's fine. But I think that being caught also helps society, because today, when I travel to South America, to countries like Colombia, Mexico, you see that there is a greater move away from criminal activities as a source of income to building sustainable society, coffee shops, schools, and so on, as viable businesses. I see a real transformation taking place in several countries which were known for illicit, industries like drug cartels and so on. So HSBC being fined when they are overtly, they overtly disregard the rules that exist and support their high net worth customers, their wealthy customers, to be able to use the banking system to launder money. That ought to be punished, definitely, because it has an impact on society. But there's a whole gray area of what constitutes, illicit activities, and it's difficult. In countries where there are wars, money gets transacted on a whole range of activities that are questionable. So then the question is, if you shut down the payment systems in a country, you will affect everybody else as well. So making the trade-off is very important. And I guess the integrity of banks, now especially that banks are focusing on transactions rather than on lending. Banks don't want to carry loans on their books very much anymore because the profit margins are thinning, and they want to be more conduits for transactions. So the onus on the banking system is even greater to know how they onboard their customers and monitor activities, especially flag out activities that are potentially fraudulent.
So there's something that I always wondered, and I'm sure you're going to be able to tell me. A lot of the banks, they kind of say your money is secure. I think in Ireland, I don't know, was it like 50,000 euro or 100,000 euro? And I presume it varies per country or whatever. I mean, I know there's been a lot of bank bailouts and they just, they never pay the individual, they just give it to the bank. But if it's 50,000 or 100,000 and you've got 1 million, why would you put 1 million when it's only backed for that? And the other thing is, even if you have 50,000 or 100,000, I think good luck in getting it if it does fail. So I'm just curious your thoughts on that.
So you're talking about deposit insurance, and many of the developed countries now have deposit insurance in place, except that deposit insurance has a limit. And then the question is, does the average depositor, if your deposit insurance is for $75,000, would you put $100,000 into the bank? The entire global banking system is becoming faster and highly liquid. And for that reason alone, all of us need to think more across asset classes. The entire banking system is undergoing a huge transformation. We saw this in the case of Silicon Valley Bank, for example. In the old days, whenever there's a bank run, you can actually see the queues forming outside the bank branch. And the bank sometimes slows the whole process down just to go out and get enough liquidity to be able to pay everyone in the queue. So bank run can take like 5 days. By the third day, new news comes that the bank is okay, and then the queues dissipate. But today a bank run is instant. One text message from Elon Musk on a Tuesday, Wednesday, $10 billion gets wiped out of the bank system. So then the question is, how much does a regulator need a bank to be insured? And the more digital money becomes, the more it is open to a bank run liquidity crisis than ever before. And if regulators require banks to maintain higher deposits or buy more expensive deposit insurance, then the banks will pass the cost down to the end customer. So you and I, as ordinary people looking back into the banking system, will need to appreciate that is what the banking system is. The more digital it becomes, the more unable, it becomes in holding its asset base and its liquidity. And I think the only solution there is to diversify our assets across different asset pools, so that if one asset pool is being attacked, we can then depend on another asset pool. So, cash is good, multiple currency cash is good. Having different assets that are partially liquid, and today it's gold and Bitcoin and all of that. You can play your asset classes against each other and not depend on any one institution. I mean, that's the best advice I can give, because the entire banking industry is under extreme stress just because of digitization.
I was looking at one of the guys. He's actually on TikTok. He's exposing a lot of stuff that's going on, and he started off kind of about all the products owned by the same companies. And when he went deeper, it was like all the corporations, the Vanguard, BlackRock, Fidelity, and all these. They all kind of own shares and everything. And I'm assuming the banks are the exact same, that they all, like, these companies have shares on all of them. So the reality is the corporations are controlling everything.
Yeah, I do a lot of work in China, and what's interesting is that China's GDP was growing at one stage, was growing as high as 12% per annum, and today it's down to 5.3% per annum, and even that's good. And despite having such a robust economic system, there were banks that were 3 and 4 layers down the hierarchy that were suffering from liquidity crisis, that basically had to borrow desperately from non-banks to meet their commitments, and have to borrow at a premium. So the interesting thing about the banking system is that it's multifaceted, and there are many layers of players, all of which leverage off each other in order to create the liquidity with which to run their business. And any one of them that loses a chair in a musical chair situation, is caught out. And then it either goes bankrupt or is asked to liquidate. And then that in turn creates a knock-on effect on other institutions. So, and all of this is speeded up today because everything is digital. So the question you're asking, how exactly can this be resolved? Is there a stable situation? No, there isn't. So we all of us need to factor that into our thinking of what we think the banking system is. The banking system isn't as secure as we think we'd like it to be. And no, we cannot ask the regulator to have it secured for us, because it will involve a cost that will make the banking system unviable.
Emmanuel, this is fascinating, and I know that the book is on its way to me, so I want to read the book and get you back, but I'm going to put it on the Awakening podcast as well as the crypto, because I think everything we discussed today is relevant to every single person. And what I'd like then is that the listeners will actually send me in some questions for when I get back. So if you're up to it, that maybe in about 2 months or something like that, we'll have you back, and I go through the book more in detail, but also we'll have some of the questions from the listeners. Would you be up for that?
Very much so, Roy. And thank you for having me on your podcast, and thank you for having a broad-minded approach to our discussion, because it's not just the banking industry, it's also the technology behind it, and it's also the business models, and then it's also about how society itself is configured, and that's different, in different parts of the world. And some societies, funnily enough, the most stable ones, like the US and the entire Western Hemisphere, or rather the West as a whole, because of their legacy infrastructure, which has been secure so long, these are exactly the countries where they're struggling, to make that transition into a digital infrastructure. And the countries with very little legacy infrastructure are just, taking it in, raking in the technologies as they evolve. And so a lot happening on that front. then the question is, what do we put our finger on? How do we track these developments and what do they mean to us? And there's a discussion I wanted to have with you, which was, what should we consider as assets? How should we, develop individual wealth as a result? So there's a lot to drill down to. So I look forward to our next discussion.
Oh, excellent. So you might let the listeners know where they can find you, and also just on your book, because I always look at reviews and everything like that. You've got 4.9 out of 5. They're all positive reviews, which is very rare. So I mean that says a lot. So, and I know that your other book as well that you're planning will be of interest.
Actually, I'm quite curious too. Like I've not had a big negative review at all. So it's either that I'm being very motherhood in what I'm saying, or that I haven't touched the nerve. But in discussions, I find that I've had pushback. So some of the things I say, like the regulator is the problem. There are people who believe that no, regulators exist precisely to help us, maintain secure financial systems. And there, the debate can go either way. So I wish there was more of that with regards to my book.
So you might let the listeners know where they can find you.
Very simply, emmanueldaniel.com. And from there, that's my blog page where I put everything, including that video on Uzbekistan. And then from there, you can trace me to everything else I do.
Okay, excellent. I'll make sure I put the links both in the audio and the video. Thank you very much, Emmanuel.
Thank you very much, Roy.
So that's all for the Crypto Podcast and the Awakening Podcast. You find them on awakeningpodcast.org and thecryptopodcast.org. As mentioned, give us a thumbs up, 5-star rating, share with your friends, and please give us comments on this. I'll open the poll on both shows so that you can actually write them in, and I'll make note of that. So the next time that I have Emmanuel on, we'll go through your questions. Until next week, take care. So I hope you enjoyed this week's episode. As mentioned at the start, you'll find my 6 podcasts on bio.link/podcaster. And also, if you'd like to start a podcast or do a podcasting tour, you'll find the information on that or on the QR code that's there. Be sure to give us a thumbs up, 5-star rating, and share with your friends because it really helps. And also, I'd like to thank danielpackard.com, helping people with fear, doubt, and anxiety. He's got a 90% success rate, and he's only charging if he helps you. So be sure to check him out, and you get a free call to discuss everything. Until next week, take care.